All right, yes, trade recap, and it's a little bit of different trade recap than normal, you could say, because I took 3 trades actually yesterday. Now, I'll fully explain why, because of course I'm a big advocate of taking 1 trade a day, whether it's a winner, break even, or a loss, I'm out. But you've also heard me say in the past that when there are really high probability conditions, you should capitalize on it. And especially in the situation that I was in, where if you watch the forecast, the breakdowns, etc., I'll update you a little bit. Past 2 weeks were pretty calm. Then last week I took a winner and a loss on Monday and Tuesday. And then afterwards I took a step back because the market was in second short conditions right there. And I'll show you the situation. This right there. So that is where I didn't do anything. Wednesday, Thursday, Friday, Saturday, Sunday, I did not do anything. Monday, I did not do anything. Then Tuesday, when there were really high probability conditions, I decided, all right, let me go, well, not full in, but let me go in a controlled manner to absolutely capitalize on this moment if it does want to fall through and it wants to hit my take profit, etc., etc. So that is my thought process behind it. So that sets me up to allow myself essentially for the next coming weeks, next coming months even, to stay on the sidelines again. Because I capitalize on the high probability conditions right now. Now, again, I can take a step back. I can take an easy step back and I have nothing to worry about. So that is how I view that as well, where in very specific conditions like these, where we have very high probability conditions, and what I mean with specific conditions and those high probability conditions is that everything that I mentioned on the Sunday on this forecast, so that was around 23rd of October, I mentioned quite a few things on dollar, Nasdaq, Euro New Zealand dollar, Euro GBP, etc. And all those things exactly played out as I wanted them to, which makes that extremely high probability for me. Because, like I always mention, is if you demand something of a price and price delivers exactly towards your demands, that is so high probability. That is exactly when you want to capitalize on it. So, right there, that is exactly when when I capitalized on it right there, which was also shown in the Discord live session itself. Now, right here in the dollar, we came into the weekly fair value gap that was sitting right there, and then we eventually expanded higher, which lined up nicely if we go over to the pair, the first pair, which was the first trade, New Zealand dollar, US dollar right here. Overlapping fair value gap with the overlapping lows right there. Extremely beautiful price action right there. That is very nice. And if we want to continue lower, this is exactly something you would want to see. When you take that monthly context right there, fair value gap overlapping with the lows, that is where we will continue lower from. That is exactly what you would want to see. So on the weekly, again, need to take into account that next week we make a weekly fair value gap. Currently not relevant, right? Or not relevant, that's not the right word. It is just taking into account that we might not drop lower because we're creating a weekly fair value gap, so we need to be careful. But still, right here, this is a perfectly fine trade. So inside the daily fair value gap, on the 15 minutes, we had a Discord live session around this time, around there, I would say. And we mentioned, all right, we now have the first part of the ST right there. We're not continuing higher off of that first fair value gap right there, which you can see it struggles to push higher. Perfect sign right there to create an ST and then potentially a re to get involved. So right there, we create the ST, and then afterwards, you just wait for the re. Now, the re, of course, needs to have quite some conditions. As in, ideally, you want it to come into, with that first candle, into the fair value gap, and ideally expand lower or drop lower immediately, without hesitation. That is the ideal world. Now, here, it took quite some time to create the fair value gap, I would argue, but still, candle-wise, we had 2 candles up, the rest of the candles just nicely down, perfectly fine in my opinion. Not a crazy consolidation or anything. Then at this moment in time, we were beneath that low, which for me is then a breaker right there because we already wicked below it. We don't need to wick below the swing low, just the bodies right there. That's already a breaker for me. So here, this breaker and that fair value gap, this fair value gap that is sitting right there, the small one, that gets confirmed by that candle close. So when that happens, in that moment in time, my thought process is, all right, we have this breaker and we have this fair value gap. So this in itself, this breaker is a discount array. A premium array. This is also a premium array. Since this premium array is lower than this premium array right there, price might not want to come into the fair value gap to continue lower. And the thing is right there that this candle close with the big expansion lower, with the big drop lower, is not supporting the idea of the next candle trading into it and then continuing lower. It's supporting the idea of immediately continuing lower, potentially. So that is something that I saw, and I was like, all right, if I can now get the 1 to 2 RR, perfectly fine within the context that I'm willing to enter off of just the creation of the fair value gap. So that right there was my entry. Stop loss above that high right there, and then targeting a 1, 2, 2, which was right there. Now I remember my MT4 perfectly got hit actually right there, and it got hit during the YouTube live stream. It was around there, I believe. My MetaTrader take profit. So right there, that is where I got filled in. Then eventually it took a while. Then we did not create new order flow legs just yet. We had some weird price action right here where we were very close to the take profit, and then eventually right there we delivered towards the take profit. So the patience paid right there. Perfect. And that is exactly the thought process behind the trade as well. So that is, and then eventually it also came back up all the way to then eventually continue lower the next day right there. Boom. All right, so that is my thought process behind the first trade. Now, whilst we were in this first trade, I also took another trade. And I was planning on, at the beginning of the day, I was already planning on, all right, we might have a couple of opportunities. So I want to diversify my risk as well, which means that on New Zealand dollar, US dollar right here, I took this setup with 0.5%, 0.5% risk. And then the next trade, which I took, was along on Euro GBP, which I took with, what was it, 0.5% as well, making up a total of 1% risk. So let me guide you through this thought process right here. On the daily time frame, we mentioned, all right, we can expand higher off of this daily fair value gap that is sitting right there. And we can, and of course with the overlapping highs, etc., and target that high and target that weekly fair value gap that is sitting right there as well. That is quite nice. So here, that Monday did not expand higher. Is that crazy? No, because news was not supporting the idea of expanding higher on that Monday. We didn't have any news. Then Tuesday, right there, we did have news. So I mentioned previous day low sweep right there to then continue higher. Could be very nice. I want to see just a simple confirmation coming back above that previous day low. So if we dive into the 15 minute, then in the 15 minute right here, we had this previous day low, which is this line. This line below that is the daily order block that was nested inside the PE race. And then eventually we had displacement. So we had the ST created right there. Then we had the RE that was sitting right there. And then it's the same thought process where we have this order block right there. That order block was my entry. And stop loss was beneath that low because there was no reason for price to come back below that low. Meaning in the 1 hour, we didn't have anything below that, etc. So that was my trade. And then eventually I held this overnight. And the reason I held this overnight is also a great topic because I got asked about it before as well. And when I do hold overnight, it is because we still have news supporting it the next day. So we still had Euro or GBP news supporting the day of trading Wednesday right there. So then for me, it's fine to hold overnight. If there was no news supporting it the next day, then I wanted to close it because then again, it might be consolidating, etc., etc. So that is my thought process behind that as well. 0.5% risk, making up a total of 1% risk for the day. Now, this was, this of course, hit take profit the next day. So that was actually 2 day, that 1 to 2 right there, which my take profit was actually a little bit higher on MetaTrader, was around there. So that is quite nice. And then, do I need to tell anything about this? Did I forget anything? I don't believe I did right here. All right, so then eventually the last trade I took was on the indices, and that was ES, NASDAQ, and YM. So during the second live stream, that was during Equities Open live stream, I mentioned, all right, ES is quite interesting, NASDAQ and YM is also interesting. Where ES and NASDAQ both came into the daily fair value gap right there, which was sitting right there, to continue lower off of that, which is very interesting, of course, because then we can just look to continue lower off that daily fair value gap. And I traded NASDAQ eventually. And the reason being is because right here, this still has the most potential for me, because the monthly overlapping part, which is my draw liquidity, that is the one I want to be targeting. So on YM, target is not really that clear. We already took those lows. And on ES as well, target is not super clear anymore. Whereas NASDAQ is a very nice target still right there. So I wanted to trade NASDAQ right there. So on the daily fair value gap lower, which is that fair value gap, we came into it 15 minutes. Oh, sorry. No. I'm explaining it wrong. Sorry. When ES and YM came into that daily fair value gap lower already, so into those daily fair value gaps lower right there, then NASDAQ did not come into it. But NASDAQ had such a nice sweep of that fake top right there that for me, a quick trade, again, taking into account that we did not come into the daily fair value gap actually, so we might still come into it right there. Taking that into account, a quick trade was perfectly fine right there for me. So I took that 15 minutes fair value gap after the sweep right there, of course. 15 minutes fair value gap, 1 minute ST. With the 1 minute ST being right there, which was again on the confirmation right there off of the breaker, was just continuing lower. I wanted to give my stop loss a little bit of a room right there. And then the 1 to 2 was around there. Perfect. And that was my trade. A very quick trade, a lovely trade. And then eventually you notice that eventually what do we see? We do come into that daily fair value gap right there. So then eventually, just to add on to that story, that is when this would now be seen as, all right, it would not be a bullish scene, as in I'm still bearish here. This is just a very, very beautiful turtle soup actually right there. A beautiful turtle soup to then continue lower. That is very nice. I really like this. And price action, I think we all were reading it like a book, and it was very nice. It was beautiful price action. And the way or the reason why we read it like a book is because we demanded things off of price and it delivered exactly in that manner, which was absolutely beautiful right there. So in this case as well, indices, just to touch on NASDAQ a little bit more, because ES and YM were already ready to trade lower off the daily fair value gap, for me it was fine to take that trade, that first trade right there, as long as you understand, all right, we still have that daily fair value gap above it, so we might want to have a quick trade, not hold it until the bottom and leaving our stop loss open. That is very important to understand, of course. So those are the 3 trades I took. Now, and then there's a reason, of course, why today I take a step back again. And the whole reason for that is because I took not only 1 trade, I took 3 trades. And all these trades were winners. Meaning that, first of all, and by the way, the risk percentage on this trade right here was 0.25%. So I did drop back in risk from 0.5% on both those setups to 0.25%, leaving me at a risk exposure for that particular day for 1.25%, which is perfectly fine in my opinion right there for 3 total setups, which is very nice. So in that moment, of course, when you take 3 trades and they are 3 winners, first of all, of course, there's some kind of happiness, like, all right, nice, I played out. It's nice to see, of course. And then afterwards, you need to understand that I was messed up. I was mentally tired as shit, like crazy. And I'm not exaggerating, because if you notice the forecast afterwards, I was messed up. My brain was fried. I was not there mentally 100%. I was absolutely destroyed after a day like that, because it was essentially me full focus on the charts. And that doesn't mean full focus as in I am full focusing 24/7 and the whole day I'm watching the charts. No, it was constantly me setting alerts, setting the right alerts, doing the alerts, setting timers for when very gaps are created. Are we hitting my level? Are we doing this? Are we doing that? And then eventually as well, equities open. What are we doing with equities open? Doing a live stream between it. So after that, I was mentally destroyed. So coming into the next day, and the reason I tell that is not for you to feel sorry for me or to boost my ego or anything. No. I'm not trying to tell you that. The moral of the story right there is if you do the same and you are at that level where you can now know, all right, I might be able to take multiple trades today because I'm feeling good. I've not traded in a while. Mentally, I'm very strong. I'm still up to date on the market, as in my skills are on point, etc. I'm ready to do something. I'm ready to run that marathon. But after that marathon, I need to rest. I need to rest. So the next day, after I made 6R, do you think I'm going to trade that next day? No. It would be stupid of me if I was to trade this Wednesday. That would be a shame on my part. It would be absolutely a shame. Because I am not, after that day, after one trade, I always tell you, you're not the same person anymore. After 3 trades on a day, you are not the same person anymore. And after 3 trades, you're also very tired after a whole day. So that next day, you need to rest. And that is, again, when I talk about that overheating meter, when I talk about, all right, you need to constantly, that's the only thing I'm doing. I'm only looking nowadays at my trading as in overheating meter. I can get involved. I can do this. I can do that. Perfectly fine. The only thing I'm doing is constantly checking my overheating meter. Am I overheating? Am I high in my emotions? Am I low in my emotions, etc. before I get involved again? And that is extremely important. That is very, very key. So the next day, of course, I don't do anything. Even Thursday, I don't need to do anything. But Thursday, I'm ready again to potentially get involved if the need is there, if there is a nice setup, etc. And Friday as well, I'm ready. If, of course, Thursday was a particular day, a specific day, etc. So that is very important to understand, that you don't push it, as in if you have just run a marathon, you don't run another one. Of course, you can do it, but the risk of energy, the risk of injury, the risk of messing it all up is very high. The risk of error is very, very high the next time you run that marathon, or the day after you just ran a marathon and you run the next one. Of course, it's going to be very risky. So that is extremely important to understand, that a situation like this is rare to see, because it's not every day that we get very high probability conditions right there. But it's important to understand as well that, especially for me, I don't push my luck the next day. As in, if I have a day like this, perfect. That is almost my week done right there. That is 6R in 1 week. That is 6R in 1 day. That is me done, essentially. So I don't feel the need to do anything the next day. That is very important. Just need to recover. I just want to get that into your mindset as well, because I don't want to give you that false impression of, I'm doing this every day and you should be able to do this every day. No. Even if you try to take three trades, it's because of my experience that I was able to take 3 trades right there. If you do not have that experience, then again, I would highly advise, for a year or more, just sticking to 1 trade a day, which I did for an extremely long time before I was able to do things like this. So that is very important to understand as well. And it is not necessarily, well, of course, a part of it is me doing it, but it's the market doing it. The market is guiding me. The market is holding me by her or his hand and taking me through that process. And I'm just capitalizing on it. It's not me seeing and being a genius. No. It's the market being very easily tradable right there through my experience, etc. That is very important to understand as well. So those are all the lessons that I want to give you, that I don't want to advocate for this, as in, this is absolutely not needed in your trading. And when you do something like this, then you know you need to recover as well. And it's not about taking 6R trades every single day. That won't help you, as in, it will be more detrimental at the end if you do that every day than it will be beneficial for you. Because there are, simply said, the market is just not nice enough overall, through all the years, the market is just not nice enough to take high probability condition trades every single day. It's just not going to happen. That is why we focus so much on that, of course, finding the high probability conditions. And when you have that experience, eventually, maybe after a year, maybe after 2 years, because you need to think long term, not just maybe next month I can see it. No, believe me, this takes a long time. So after those 2 years, then when you can truly spot high probability conditions like a master, then you can do things like this. So again, that is very important to understand. Not trying to boost my ego or anything. I'm not like that, please. So I'm just trying to give you that lesson right there. And the warning and the mindset, of course. All right, perfect. Thank you.